It seems to be a good month for home loan borrowers as multiple lenders raced to cut interest rates after the Reserve Bank of India governor took them to task. With home loan rates now dropping below 10%, the psychological double digit, is this the right time for home buyers sitting on the fence to take the plunge and buy a residential property? Nikhil Narayan Sivdas has this report.
Call it tough love or a warning to get with the program. Earlier this month, RBI Governor Raghuram Rajan took lenders to task for not lowering retail interest rates in spite of the RBI cutting rates by 50 basis points and in spite of inflation coming down.
We want to facilitate the process of transmission. I don't see an environment where credit growth is tepid. Banks are sitting on money, so to speak. And their cost of funding, their marginal cost of funding has fallen. The notion that it hasn't fallen is nonsense. It has fallen. They can borrow at the margin today at 7.5%. We've kept it. There's plenty of liquidity in the markets.
This tough stance seems to have had an effect, with large lenders lowering interest rates for retail consumers. Home loan rates in particular have come down to a low of 9.9%. Borrowers can now avail up to 75 lakh rupees from HDFC, up to 1 crore rupees from SBI and up to 5 crores from ICICI at this rate. While Axis Bank has no such upper limit, it's charging a rate of 9.95%. Among the lenders, SBI and ICICI have the most attractive rates, offering special home loans at 9.85% for women borrowers. All plans which can generate significant savings for borrowers.
Now they're available at 9.9%. The difference in monthly EMI for a 50 lakh loan over 20 years when this rate changes is about 829 rupees per month. Now, if you calculate this 829 as a saving over a 20-year period, you end up with roughly about 2 lakhs, which is a reduced outflow from your pocket to service the loan.
Savings aside, the rate cuts are expected to give more confidence to home loan borrowers to enter the system, especially women borrowers who are now in a position to take a loan in their own name or as a co-applicant and thereby acquire direct rights to property while enjoying a cheaper rate. But while it may seem like the best time to go in for a home loan, industry leaders say further rate cuts are very likely.
But I feel there's a further 25 bips to 30 bips more rate cut is possible. Maybe in next 2 quarters. Even the recent results which have come, annual results of various institutions, even the leading institutions as well, the credit demand has been sub 20%. So for that to happen, I'm sure for the takeoff to happen, they will push the rates down.
So the big question is, should you wait for further rate cuts or go in for a home loan now? Let's hear what the experts have to say.
But if you have a great property, your life stage is at a stage wherein you're ready to make that purchase, make it, but just make sure you get a good housing loan and it's a floating rate loan wherein the benefit will accrue to you when the rates are cut.
While further rate cuts are a possibility, there is no denying that this is one of the better times to go in for a home loan. Now one can only hope that cheaper rates will spur housing demand and thereby bring India's real estate sector out of its prolonged slump. From Mumbai, Nikhil Narayan Sivdas, NDTV.
So the big question is, should you wait for a further rate cut or go in for a home loan now? Let's hear what the experts have to say. Harsh Rungta, CEO of ApnaPaisa.com, joins me from Mumbai, and also B. Sriram, Managing Director of State Bank of India. Gentlemen, thank you very much for joining in. Mr. Sriram, I think the first question should be to you. Is it likely that the banks could soften the rates just a tad bit more? 9.5 would be perhaps a lot better. Do you think there's room for a further rate cut in the next 3 to 6 months?
Now, at the moment, we have brought it down by 25 basis points from around 10.10%. It has come down to 9.85, which is basically at the base rate of the bank. And I would assume that this is a good enough rate for somebody to enter in at the moment. Home loan typically goes for about 25-30 years. So over a period of time, a lot of things get neutralized. And I think waiting for some cuts of another 10-15 basis points may not serve a very great purpose.
All right. Why is it, sir, that the RBI key rates actually have gone down by 0.5% from January to now, but your rate cuts have been more moderate. Can you explain that to our viewer?
No, it takes time for the banks to transmit the rate cuts of the RBI. RBI is the repo rate that is cut. Typically, any bank has got a liability and an asset. Most of the Indian banks will have a liability which is on fixed rate and asset which is on floating rate. So any cuts in base rate, it cuts the floating rate of the asset straight away, and thereby impacting the cost of funds of, or rather the yield of on margins
Mr.
for
Sriram,
most
just
banks.
all right.
So they need to wait and watch, and then try and transmit after a few.
All right, fair enough. Mr. Sriram, just one question. Have you cut rates for just new customers, or existing customers will also get the benefit?
There are two things. One is that the base rate impact will impact all the existing customers as well. The 15 basis points base rate reduction will impact all the existing customers. For new customers, the home loan rates have been brought down to 9.85 for women customers and 9.90 for others. In addition, we have a small charge of 0.56% for anyone who would like to switch over from their existing rates to the current rates.
Okay. Have you seen after a rate cut a little bit more excitement, Mr. Sriram? Or is it too early to judge whether people are buying, taking more home loans?
I would say a little bit early, but we do see a lot of inquiries and queries from a lot of customers. And some of the questions, of course, what you are also asking in terms of how the interest rate cycle is likely to pan out. But typically, the more busy part of the home loan market was also in the month of March, when most of the branches, had processed and sanctioned most of the proposals on hand. So going forward, we would expect that all these inquiries and queries that come from customers will start to translate into home buying and home loan selling for us.
All right, fair enough. Harsh Rungta, come in here. SBI reduces rates for existing customers just by 15 basis point, for new customers by 25 basis point. There's only a difference of, 10 basis point. But the fact is that 10 basis point means 10 versus 9.9. It's a single versus double digit. So we've always discussed and debated why not equate existing and new customers. And this is your largest lender or largest public sector bank. Shouldn't they have done that parity?
Yeah, I think this whole issue about old borrowers and you having to ask whether the rate reductions are only for old borrowers, also for new borrowers, etc. I think what this clearly shows is that, the whole regulatory architecture which was supposed to bring this around, the whole base rate mechanism, is not being transparently executed. I think, and that is true across banks. It's unfair to hold just one bank to it. I think every single bank has had an issue. I think whilst the arguments given by the banks are correct, that when interest rates drop, it takes a while for their deposit rates to drop, and therefore it will take a while before their actual interest rates will start dropping. I think the argument holds both ways, and this we have again repeated many times, that even when rates increase, it should take time for it to increase. But normally that does not happen. And this fact has been attested to by the regulator himself, committees formed by the regulator, studies have been done on it, etc. So I think that fact is indisputable, that there is an unfairness quotient as far as the retail loan industry is concerned. And I think it is for the regulator and the lending industry to work that out. It is not enough to say ki just because you don't have to pay a prepayment charge and it's a competitive industry, and therefore the customer should be very conscious and he should shift on his own. I think regulations should be there to ensure that transparency is maintained. and to that much extent it's a failure of regulation, very, very clearly.
All right, fair enough. So let's come down to that one basic point. The real estate industry has been saying bring down rates, and then of course 50 basis cut by RBI. Banks took a lot of time. In fact, they took a big nudge and push from the governor himself to bring down half of what actually has been passed on to the banks, and that also about 3 months late. Now, though, with the number, most banks that I'm seeing, and we will flash the rates of most banks here, and HDFC as well, financial institution, 9.9 is what it's settling at, Harsh Rungta. Do you think this is good enough to bring back the missing buyer back to the real estate market?
Manisha, see, the home loan rate is only one factor in pushing demand. I mean, you take a home loan when you buy a home.
But developers always claim that, you know, if you brought the rates to a single digit, you would see a huge jump up in sales. But that doesn't really happen, does it?
Or you could turn that argument around and say that if the builders drop their own home rates, I think there will be a big pickup in demand. I mean, eventually, yes, sure, home loan rates play a part in creating demand. But a much bigger part are property rates, and I think very clearly today in most parts of India, property rates, an average house is I think running at 6 or 7 times, or in some cities even larger than that of annual incomes, whereas a comfortable one is 4.5 times. So very clearly property prices are way ahead of earning capacity in most cities in India, and that's why you see a lack of demand. A small drop in interest rates, we have seen for a 50 lakh loan, a 0.25% drop in interest rate will be 800 rupees a month. Not a bad figure, but hardly enough to say that that will lead to a big jump in demand. So I think very clearly lot more needs to change before we will see a big jump up in demand.
Okay, so you have always discussed on how a differential rate can actually affect your pocket. You said 50 lakhs, 0.25%, 800 rupees. Let's bring up, I mean, for our viewers, average home loan size in India, if it's 20 lakhs, if your EMI is at 9.9%, what you end up paying is 19,168. Now, if your EMI is at 10.15%, then your monthly saving is 331, yearly saving is almost 4%. Let's bring up the other graphics, which is also very interesting. I mean, I don't know how many people really buy taking a home loan of 20 lakhs, at least in the top cities, even though you have an average home loan size that must be because of tier 2, tier 3 cities. But if you take 50 lakhs, which is a more valid or applicable number in tier 1 cities, what happens? At 9.9, it's 47,920, and at 10.15, 48,749. So yearly saving is almost 10,000 rupees. So Harsh Rungta, anybody at not 9.9, it's really time to shop, isn't it?
Oh, that is absolutely true. I mean, even whilst regulation should be allowing old consumers to get the benefit of falling rates, it does not take away the responsibility of the consumer himself to be very conscious. I mean, the least that a consumer can do today is to call his bank and say, and threaten to switch. And if he is a good customer, his existing bank, I think the SBI MD also just mentioned that his existing bank, by paying a small fee, will shift him to a lower rate. There are still consumers who are paying 12%, 12.5%, and I'm talking across lenders. Okay, so I mean, all that it needs is a phone call and this, and at least pay off this small little fee to shift to the current lowest rate. That fee should not be there, but at least the least the consumers can do is to do that. Or if the current bank is not willing to give you the new low rate, shift it out. There is no charge for that. And today, if your loan amount is good, I mean, if you have 50 lakhs plus of loan amount, your property is good, you will be able to get doorstep service to shift your loan. So there is no earthly reason today for anybody to pay double-digit interest rates if he is a good borrower and his property is good.
All right. Finally, what do you make of special rates for women borrowers? First, Mr. Sriram, this is very interesting, but both ICICI and SBI have just 0.05% lower for women. What was the thought process behind it? To encourage more ownership of property by women?
That is right. That is one of the things. The other is to empower women. The third is to try and get women as joint ownership of the title as well, so that it also empowers them in a different way. All in all, I guess basically to try and push the focus on women.
So this is
And
applicable,
I'm very
sir,
happy and
even
proud
on
that
joint.
since we did this,
Is this
since we
applicable
did
on
this,
joint loans,
there has
sir?
been an incremental growth. In terms of it is applicable on joint so long as the first name is of the woman borrower.
Okay, carry on, sir. You were saying that you've seen an incremental.
Earlier the women borrowers, the incremental growth of home loans, the women borrowers are about 17%, and since we launched this scheme, the incremental growth has gone up to about 37%. So it's almost a fantastic growth, and I'm sure with the more and more women purchasing property, it will also be a good learning and educative experience for the women.
Absolutely, sir. Harsh Rungta, so stamp duty lower for women in many states, and our home loan borrowers also, lenders, pardon me, saying that, look, we'll give you that tiny extra push. So this is the way to actually ensure that men make their spouses, wives, mothers, sisters, joint holders of the property, isn't it? It's a really, really smart move.
I think if you see the stamp duty in many states, the stamp duty concession is available only if the woman is the only owner. And I think that is an excellent move, because in India, women rarely, get title to even property that they buy with their own money. Okay, so I think this is an excellent move. In theory, the lower rate is also for the fact that women are better repayers of loan. That is there. But more importantly, in the Indian context, where I think women don't have that much say in property titles, I think this move is very, very good. In conjunction with stamp duty, lowering of interest rates, I think very, very clearly it's an excellent move to empower women.
Harsh Rungta and Mr. Sriram, thank you very much, gentlemen, for joining in. Very interesting discussion, and nobody can predict the rate cycle, but if inflation stays moderate and the governor has a comfortable view of what's happening with the global economy, then perhaps we may get at least another 0.25% to 0.5% rate cut this year. Thanks very much, gentlemen, for joining me.